video for project part 1. In this part, we're going to go through some of the journal entries from December 25th to December 31st. Alright, since most of the journal entry has been recorded, we're going to start to work on December 25th. Okay, the first journal entry, transaction. The board voted to purchase 3,800 shares of its own stock from the shareholder, $24 per share. So it's a typical repurchase journal entry, and we have issued check already. So that's a cash disbursement transactions, right? So let's go to cash disbursement journal entries and record this transaction. The date 25th. Okay, we have issued a check number. And payee, right? The shareholder's name. And the amount of cash we're going to credit equals what? Equals the number of shares we have repurchased, right? 3,800, and per share price $48. All right. So this is just one side of journal entry. Credit. We credit cash, and we're gonna debit. Well, we're gonna debit treasury stock. We need it. It's not account payable. It's not inventories. So we're gonna record in sundry account, meaning other account. Okay. Account number, treasury stock. So we go to general ledger. In general ledger, all the accounts has been listed together with their account number and balance. Treasury stock, it's right here. Account number 330. Or we already have some beginning balance for treasury stock, so we have treasury stock already. 42,610. With 700 shares repurchased previously. So we're gonna debit the treasury stock account 330, and it's the same amount. It's a debit. Okay, so we finish this journal entry. This is called one-line journal entry, which provides basically the same information as we have in the multiple line debit and credit in the multiple line journal entry. That's a repurchase journal entry. Let's move on. Right? The next one, it's a payroll information. We have wages, right? FICA tax withhold and other withhold, and also the FICA tax matched by the employer. Okay, and we issued a check. So these has been covered in chapter 13. Okay, we need basically 2 journal entries to record this transaction. Right, one journal entry we're gonna issue a check to pay out salary with some withholding payables, and the other journal entry we're gonna record this employee match, which is a payroll liability. All right, so first the payment. We go to cash disbursement again. It's a 25th transactions, and check number. Payee, we don't know, so we can record the payroll, right? So better to write out the journal entry. Basically, we're going to debit the payroll tax, salary and wage expense, right? Debit salary and wage expense. We're going to credit cash. We're going to credit other withholding. So total expense, salary and wage expense, 5,970, and the salary and wage account number. Okay, we can go to the general ledger to find that account number. So I'm not going to go through that. All right, so basically we're going to debit the expense Okay, we're going to credit withheld liability payable. Now those are credit number. And finally, we credit cash. We pay cash. Okay, so that's the first journal entry for this transaction. And the second journal entry, that said, the employee is going to match the FICA tax because it's not a cash disbursement, it's not a purchase, it's not a sale. This journal entry will be recorded in this general journal. Okay, so 25th. And by the way, for general journal, we use a regular the debit and credit, the 2-line or multiple lines journal entries. So this is December. Okay, December. We're gonna debit, right, the payroll tax expense, and we have to put the account number. You can get that from the general ledger. And a credit indented. Okay, FICA tax payable. Again, account number. All right. Next. '26. The board director declared cash dividend $1.20 per share cash dividend payable on January the 14th, so next year. So it will be reported as a payable, right, by the end of December. Journal entry is very straightforward, right? We will debit dividend and credit dividend payable, but the key is to calculate how much, right? Remember, we pay dividend based on shares outstanding. So let's find out how many shares outstanding as of December 26. So let's go to the general ledger. How many shares has been issued? Based on $15 par value, right, from the common stock balance, we should be able to calculate that we have 12,600 shares has been issued already. Okay, shares issued, but we do have some treasury stock. Okay, we have beginning balance 700 shares treasury stock. Remember, we just repurchased also 3,800, right? Right here, 25th. So shares issued, right, minus treasury stock, and we have shares outstanding as of December 26th. And each share we're going to give $1.20. That's why we're going to debit dividend 9,720 and the credit dividend payable. Again, this is not a cash transaction, not a purchase, not a sell. So this will be reported in the general ledger, general journal, right? So 2026, we're going to report dividend. Going to find out the account number. And then credit dividend payable. Again, find out account number. Actually, I'm going to use the formula to let equal the debit. So if you copy, if you type, you may make mistake, right? All right. This is a dividend. And the next, okay, the president informs you that a customer convert account receivables to right, it's our account receivables to notes receivables. So we're going to start charging interest. Okay. Again, this is not a cash transactions, so it will be recorded in the general journal. Basically, we're going to debit notes receivable, and we're going to credit accounts receivable. Right? This is the journal entry we have. Let's put the account number. All right. And next, a half-acre parcel of land to the building is acquired in exchange for 850 shares of unissued common stock. Land has a fair value, right? All right. So this is your issuing stocks for assets. Issuing stocks for assets. It's not a purchase. It's not a sale. It's not a cash transactions. So we're going to report these transactions in general journal. We have learned this already, right? So basically, we're going to debit land and the credit common stock and the credit paid in capital in excess of par. In this case, we don't know the share price, so the value of the transaction is determined by the fair value of the land, which is $48,000. So December 20, this is 29th, 29, December 29th, yes. We're going to debit land with its fair value. Okay, we're going to find out the land's, right, account number. Then we're going to credit common stock with the par value issued. Par value multiplied by 850 shares issued. And par value, I think it's available, right? If you read par value right here, it's $15 per share. And the rest is additional paid in capital. And this equals the difference between the land and the common stock account. All right. Next. An invoice in the amount of $1,060 is received from the lawyer for legal service involved in acquisition of the land. Right, so we pay the lawyer because we want the land transactions. Therefore, the legal fee will be part of the cost of the land, right? Anything we paid for the land will be recorded as the cost of the land. Because this is a cash disbursement transactions, we need to record it in cash disbursement worksheet. So in the 29th, we issued a check to pay the lawyer and write lawyer's name and the amount. Credit cash, we're going to debit the land account. Okay. $30. Issued check in the amount, right, for advertisement run in the home building supplement. Alright, so this is a cash disbursement transactions. And obviously this is a advertisement, so I'm going to find out expense account to record this amount. So the best account to put this number is advertising expense account number 610. So in 30s, we're going to issue another check to the Northern Star Company to the advertising expense account 610. We debit the expense. Alright, next we issued check. Again, another cash disbursement transaction. Issued a check to Standard Oil in payment, right? The gas, oil, and truck repairs. Right, use freight out, which is a transportation account. Freight out. So if we check the general ledger, that's freight out. We do have account, right? So number 644. So we're gonna record another cash disbursement right here, account 644. So I'm not gonna write all the journal entry, okay? Next, we have purchased copper and cast pipe from vendor on account. So it's purchased on account. We have account payable. Purchase order, total amount 55,840. 1/10 L of 30. Okay, this is a typical sales term. So this is obviously a purchase journal entry. If you look at purchase journal entry, right, it's very concise because it has only one line where we're going to record the vendor's information, right? It's account payables because on the debit side it's the same. It's inventory. On the debit side it's always inventory, so we don't have to repeat. So on the 30s we're going to record a purchase on order 320. That's for Oxenford, right? We're going to write the sales terms, which can remind us to pay to get to the discount if we want. And for this account recorder, it's a sub account for the vendors. So if you check the sub account for Oxford, right? A sub account is 35. We had some payable balances with Oxenford. $35 and the amount. By the way, this is the last purchase journal entry we have. So in total we have December we have 6 purchase journal entry. So we can get a total number, right? We can get a total right here. The total and this number should equals the check number provided. Okay, so this is okay now. Alright, next we issued check to the bond sinking fund trustee for deposit in the sinking fund. Use other assets. So again, this is a cash disbursement transaction. Cash disbursement. So let's figure out what's the journal entry. Right? Because it's other assets, we're going to debit other assets. And a credit cash, right? That's it. I'm gonna record it in the cash disbursement journal entry. I'm not gonna do that. We sold plumbing supplies to customer on account. So we will record accounts receivables invoice 1211. So it's a typical sales journal entry. That's 30s. I think I missed this one, right? We sold pipe plumbing materials to a customer on account. So we can record these together. Basically, they're the same journal entry. Sales journal entry. 29s we have the sales, and 30 we have another. And for the 29s, the invoice number is 1210, and this is 1211. Okay, we're gonna record our customer name, and their customer account number, which is available in the instruction. And then we're gonna debit accounts receivable, right? Credit sales. And right here in this column, we're going to record the second journal entry for sales, which is inventory cost. Right, we debit cost of goods sold and we credit inventories. Those are the two journal entries for sales in perpetual inventory system. And cost of goods sold information, I think it's given in their instruction, right? Right here, the cost of inventory sold in December was 70% of the sales price. Therefore, the cost of goods sold will be 70% of the sale price. Okay. Next, we receive a check from Boca Beauty in payment of invoice 12/7. Right, that's our cash receipt transactions. But I don't know anything about the discount, so let's find out where is invoice 12/7. Yeah, we can do a search to find out where is invoice 12/7. It's right here, December 12th. Right, we sold pipe to the company on account 24,730. And based on our sales, right, of the general sales account for our company, our policy is 2/10 and over 30. So if they pay within 10 days, we offer a discount. Now it's already 31st, right? It's already past the discount period, so there's no more discount for this customer. And we're going to record a full amount. No discount. So in cash received, 31st, we're going to receive money from our customer. the cash amount, and we're going to credit accounts receivable, basically. Credit accounts receivable. And let's put the customer account over there, 117. Okay, there's no discount, no other information needed. All right, next we issue check $54,018 to Smith Pipe in payment of purchase order 317. Again, it's a cash disbursement, but I don't know if we need to record any cash discount. So let's find out information for the purchase order 317. It's right, it's right here. So purchase order 317, and the sales term is 2/15. It's different, and over 60. So if we pay within 15 days, we'll get a 2% discount. Since we paid on December 31st, I think we should get a discount. Okay. So let's record the cash disbursement. Look, this number is below the invoice number because the difference is our cash discount. So cash disbursement on 31st, we're gonna pay, issue a check. Right to Smith. We credit cash, but our invoice, right, with debit account payable, our invoice $55,120. Right, this is Smith's account, 39. No, what else? We debit account payables, we credit cash, and we will credit inventory to record a discount. So we're going to credit inventory $1,102. That's a discount we have. Okay, we finished this journal entry. Next, okay, we're gonna do the petty cash replenishing journal entry. Okay, we issue a check to replenish this the petty cash account, and we're gonna record all these items. We have supply expense, freight out, freight cost. Okay, freight cost will be recorded in inventory account and miscellaneous expenses account. And we also have a cash on hand. That's $8. So basically, we're going to replenish these accounts, these 4 accounts. And again, it's a cash disbursement journal entry. Okay, I'm not going to record that. We're going to debit those expenses account and debit inventory account, and then credit cash. Okay. Next, we sold an electric truck lifter to a company for cash. Okay, the original cost. We have salvage value. We have accumulated depreciation. And straight line is used. Alright. Now the company follows the practice recording the half year's depreciation in the year of acquisition and half year in the year of disposal. Right? So first we have to bring the depreciation expense up to December 31st. Okay? Then we will calculate the carrying value of this truck lift and the gains and losses of this sales transaction. So let's figure this out. So we can find the actually all the fixed assets has been reported right here. The 3 lifted truck. So we are selling this one, which is purchased in 2011. Okay. Salvage value $9,000. So let's calculate what is an annual depreciation. Annual depreciation equals the cost, right, minus the salvage value, and divided by the number of years used. 10 years, useful year. Oh, that's not a numerical number. So $700 per year, annual depreciation. And for 2011, in the year of purchase, we're going to depreciate half of that based on the company's policy, right? And 2012 that's $700. So we have so in total, accumulated depreciation as of 2017, right? 4,550, right? We got this information in the transactions. So what is 2018 depreciation? Right, this is the year of sale. So we're gonna follow the company's policy, do a half year depreciation, and by the end of 2018, the accumulated depreciation will be $4,900. Then what is the book value or carrying value? Right, carrying value equals the original cost, right, less the accumulated depreciation, well, $3,000. $3,000. And we are selling these for $2,620. Right? Obviously, we're gonna have a loss, right? We have a $380 loss. Now the journal entry is very clear, right? If you write everything down, we're gonna remove the original assets from the book, right? So we're gonna debit accumulated depreciation. We're gonna credit the lifted truck, the cost. We're gonna debit loss, right? And credit cash. We're gonna debit cash. So first, in the journal, we're gonna record the 2018 depreciation, the half-year depreciation. And we're gonna credit, right, the accumulated depreciation. The lifted truck. Then we're gonna go to cash received journal entry because we received the cash in the sales transaction on the 31st, right? We receive cash from the buyer. We debit cash. Okay, we're gonna debit other things. It's not account receivable. There's no sales, no discount. But we're gonna use other accounts, sundry account. So as we said, we're gonna debit a loss. Right? We're gonna debit the accumulated depreciation, the full amount. And then we're gonna debit the cost, the credit. We're gonna credit the cost of this truck lift account, original cost. Okay, so we finished this journal entry. Next, we sold fixtures on account, so it's a sales journal entry. I'm not going to write that. Okay, and because some of the time petty cash fund has been smaller, so we're gonna increase the petty cash account. So we're gonna issue a check. So this is a cash disbursement journal entry. Basically, we debit petty cash, credit cash. Again, I'm not gonna write it. And we have another payroll journal entries. Gonna follow the previous ones. Again, I'm not gonna write that. And then finally we have cash sales in December. Cash sales since December 12th, total will be 59,160. So this will be a cash received journal entry, right? Cash received journal entry. Cash sales, we're going to debit cash. And we're going to credit sales. If you look at, we already have another cash sales amount right here on December 11th. Then we record another one December 31st. We have two cash sales amount in December. In addition to that, if you look at this one, because it's a sales journal entry, we're going to record the cost of inventory sold. Right? So we're going to follow this one, the same journal entry. And we're going to record the cost of the sale. That's 70%. 70% of the sales amount. Okay? Okay, so we finished all the regular journal entry. Okay, in the next video we're going to talk about adjusting entries.